what do we need to do to protect ourselves ahead of any type of a disaster? First off, I would say make sure that you have copies in the cloud in some sort of vault. We use a platform where our clients can put their major documents into a vault. And so you could have everything from your mortgage statement to your credit cards to any important papers. You can have that in some sort of repository that you can access in a timely manner. And then reevaluate whatever insurance you have. So you have to understand that there are 4 categories of coverage in your homeowners or renters insurance. The first is going to be coverage A, which protects your physical property, the building itself. Now, if you're in a condo, oftentimes that will be covered by your homeowners, but you want to make sure that you have dwelling coverage. Coverage B is going to cover if you have a pool or a shed or some other structure on the property. Coverage C is going to cover your personal belongings. So if you have renter's insurance, this is going to be really important for you, because coverage D, which is your loss of use, meaning the insurance company will basically give you some money to live on for housing while you're waiting for your place of residence to be rebuilt or repaired. So it's going to be very important because that's going to be a percentage of your coverage C. So make sure that when you look at your coverage C, as far as how much you're covering your belongings, that you speak to your insurance agent or company about what that means as far as how much coverage you're going to have for coverage D, which is your loss of use. This is really important because you don't know how much the government's going to kick in. So you want to make sure that you have your own coverage as well, even if you're a renter. So when you look at your loss of use, that's generally going to be calculated as a percentage of your coverage for your dwelling if you own your home, and for your personal property if you are a renter. So for example, if your dwelling coverage as a homeowner is $200,000 and your company allows, say, 20%, then your loss of use coverage is going to be $40,000. And that would be similarly for your personal property. So generally, your personal property, say you have $50,000 of coverage, they may only give with that say $5,000 of loss of use. Well, in California, our rents are not going to work that way. So I personally have additional loss of use coverage so that I'll have at least 6 months of my full rent value. But keep in mind, FEMA is going to come in and probably help you out as well, especially if it's a national disaster.